What's up, Jitlets? Let's do a little recap of the week. What's working, what's not working, what I'm looking for moving into next week, and let's dive in. So, one thing that I've really been loving lately, and my accuracy has been honestly amazing so far in December. Like I'm feeling great. Like I'm zoned in, I'm in flow state. Um, but it's really looking for as many confluences as you can find. Okay, so let's hop over to the whiteboard. And when I say looking for confluences, what I'm really referring to is how many things are presented that you can put in your favor so that you can probability stack, right? So you want to be able to put as much conviction behind your trade as you can, especially if you're in a cash account. Because if you're not in a cash account, you can kind of bend the rules a little bit, right? Because you can afford to be wrong. But if you're in a cash account, kind of can't. So we're focusing on A plus setups only. You shouldn't be trading B plus. You shouldn't be trading B, C, A quality setups. Okay? What does an A quality setup look like? A quality setup has a few things. Number one, you're above the 9 EMA. Okay, so we're trending above the 9 EMA. If we're below it, how could that possibly be an A quality setup? It's not. You're trading a bearish play. So we are above the 9 EMA. Criteria 1. Criteria 2, the float is under 5 million. So under 5 million on the float. 3. You should probably know 3 by now. News. Breaking news. A catalyst. You need a catalyst, guys, to go along with that low float. If you don't, where are you getting an A plus setup from? You're trading something without a catalyst. You can't even be B quality. Okay. So number 4, risk management. Risk management, guys. Every single time that you enter a trade, you should not be thinking about what do you stand to make from this trade. You should only be focusing on what do you stand to lose from this trade, okay? Because if you go into it without a risk management plan, chances are you're going to enter high, you're going to enter off no support, you're going to enter with no plan, and it's going to start moving erratic and you're not going to know how to react. Whereas if you strictly trade only thinking about your downside, allowing the upside to happen, you're going to have better results. And what I really mean by this is simply just buying off of support levels. And you have the $0.50. So you have 50 cents is a support and resistance level. The whole dollar, so double zeros, whether that's 5, 6, 7, 8, 9, 10, 11, blah, blah, blah. And then we'll go moving averages here. So we'll just put moving averages. Now, what that means is you're buying off the VWAP, you're buying off the 9 EMA, you're buying off the 20 EMA, whatever it is. It gives you a clear and obvious understanding of if the stock goes to this point, I'm out. That's how I trade. I don't ever trade without a game plan in my head of when to get out. I'm only focusing on the loss when I'm in a trade. That's it. I'm a manager of risk and an observer. And when it's going up, you're just observing. But you have full control over your risk. So you don't want to be the person that lets it go all the way down and draws you down, and then your account's blown up, and now you're in a fucking pitfall, and now you can't make any money because you're too stressed out. So trading off of support levels via risk management. Very important. Maybe the most important. Tight spreads. Okay. Now, when I say this, I'm referring strictly to what's the level 2 reading, because if you try to buy on the ask, sell on the bid on a stock with huge spreads, you can lose 20 plus cents per share like that. So if you can stack all of these in your favor, especially number 4, okay, especially number 4, you're going to be able to actually do well. And that's the truth. So that's your A quality setup, guys. And just only trade that. And if it's not there, then you have a no trade day, and that's fucking tough luck. Because that's better than blowing up your day. It's better than blowing up your account. So we can move into actually looking at some of these archives together. We can go through this together. You can see where am I buying? Where am I buying, guys? I'm buying off support, the VWAP. Now, I lose this trade, just so you know, but it was easy to manage my risk. I knew exactly where I was going to cut this position. Already in the red on the day, right? But look, bullish reversal. We know that technically is a hammer candle, which is a bullish candle. Back above the VWAP technically should be indicating that this is happening, right? So I'm looking for this to buy in with my stop right below the VWAP line. I mean, that's a couple of cents of risk. Looking for this immediate push back above 420 with a climb to 450. It was there. It was a good setup. I'm not mad about this loss one bit. So you see I enter, and if we're just watching my P&L right here, you can see it starts dipping. Now there's a moment of indecision here, which is to be expected. You know, you don't want to enter off support and then think, oh my God, I got to get out the second it starts to dip. Because look, we still got 30 seconds in the candle, right? You have to extend the risk a little bit past your risk line, but you have to be very disciplined about how you approach that. Because if it starts to go red and reverse, you'll see like it does here in the last seconds. That's your sign. That's all you need to know. I literally said it in the video. I said right here in the last seconds is not what you want to see. I should have cut the position right then and there. And I don't, and I end up getting slippage right here. Minus 327, right? It was a good trade. It was off support. The volume profile looked fine. MACD was green. It was fine. Now, this is a momentum trade that requires experience. I took a large position here after this initial pop-up. I got in right there on the 10-second chart. It would have been right here off support. This is a very risky trade. This is not something I would recommend any of you ever attempt to do until you have a proven track record and actually know that like you're not going to be emotional. You can see I'm instantly, the second I enter, I'm up like $250, like already back. And we let this thing ride up. And you see we make a full recovery to green. And I wasn't looking to ride this thing all the way up. I just wanted to recover my loss in a quick momentum burst. Okay, that was a very quick volume squeeze. And if we look at it here together, I made over 40 cents a share on that play. That's huge. That's very big. So let's move forward a little bit here in the video. This is a 9 EMA dip play, guys. So this is off support once again. I do buy a little high here, but this is that big leg up, chop, EMA hunt, rip. Okay, so you would buy here with a stop here or even below the candle. So I buy a little high, but I get that immediate push because this was a low float momentum squeezer. Look, I'm already back up. Now, I did take a loss in between that last trade and this one. But you can see, like, we're just letting this thing ride up. And I end up getting a little bit of my money back from the first loss. So if we look at this, this is another momentum breakout play. I'm there. I'm early. We're off support. I don't jump on it when I should. I'll tell you exactly when I should have bought it. We're going to see it on the 10-second chart a little bit better. Right here. Right here. This is where I should have bought this play. And I actually remember thinking it in my head. So if you look right here at the 10-second chart, right? You see how this opened up above the VWAP on the 10-second and immediately started to push? That was all I needed to know. Here's why, right? If I had punched the order here, my risk management is right below VWAP on this 10-second chart. Just cut it if it goes red. But I stand early enough to make this big push that happens. And look how quickly this happens, okay? So even if I bought right here, let's assume I get a fill at 470. Watch the 10-second chart. Ready? Boom. Over 5, 530, 545. That's ludicrous. That's what I look for. That is what I look for. And it was very predictable, very easy to manage risk. Now, I was late to the jump. Totally my fault. But if I had entered that, I'd be up 50 cents a share on several thousand shares. It's a lot of money. That's a lot of money. And I would have just bailed out right here. Would have punched it out. Maybe I got some slippage, whatever. I still would have been up a ton. So you're going to see right here on the 10-second chart, it starts to climb and it starts to make the jackknife look. Okay, so we start getting an indecision candle built. Now you're targeting a micro pullback entry here on this, okay? So we come down, we test support again, holds, opens green. You're looking for this candle to break over that candle. So watch very closely right here. Starting to fall below VWAP. Now watch when I enter my trade. Curls up, base is out. I'm checking out news in this moment because I can tell that there's some indecision happening. There's some volume that fell off. Right here again, you get that gap up. You can cut the position right here if it drops below this, okay? Starts to curl up. Starts to squeeze right there back to 520. You're looking for the break over the data highs. I put the order out, wicks down, fills my position, starts to climb. I'm looking for the break over 550 as I just said. Easy risk management right below the VWAP. Watch this right here, ready? Big push up. There's 4-4. There's 7. It hit 7-4, 6-6-0. Like it's just boom, boom, boom. That I entered was off support, guys. Okay? You have to be doing that. And if you can do that consistently, honorably, with discipline, you're going to be successful. Okay, so I hope you enjoyed watching this little recap. Big announcement tonight. I'm excited. I hope you guys are excited. And I'll catch y'all later. Peace.